Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Paris Rapeseed. The market's rise since January this year started back in August 2024 from the support of the now flatlining long-moving average, currently at 495.25, and the 50% absolute Fibonacci line of 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. Back then, prices formed a not very pretty looking reverse head and shoulders pattern with a fairly flat neckline, currently 478.75, highlighted in bright green on my daily chart, which is impacting the market even today. Anyway, back in the process of rising between September to November last year, the market created an expanding wedge pattern that soon morphed into a bull channel and saw prices run up within this pattern, peaking November last year at the March 2023 high at 540.75. The turn low was with a gapping move lower, and the drop was halted by the medium moving average, currently 512.75. The subsequent recovery stopped short of the previous November 2024 high, and that's peaking in early December 2024. The following pullback low was also not to the extent of the earlier November fall, thus giving some ammunition for a fresh attempt higher. Now, in reality, whilst we made newer, higher prices, the closes this past January did not match this enthusiasm, closing once again below the March 23 high at 540.75. All the time it tried higher. All this action brought to my mind again my comments from 12 weeks ago when I said, and I quote, "All this raises a question as to whether the action since mid-September, especially since mid-November, is a double top in formation or a bullish halfway hesitation." End of quote. Well, after the peak in January, it turned out to be neither of these scenarios, but instead a triple top, with the January high itself being a horn top. 5 weeks ago, prices were once again held up by the medium moving average, but with changeover, we had a big gapping move lower, originally 490 to 509.75. This is not the largest gap lower I have seen here in this market, but it was useful enough such that prices opened after it below the gold long moving average and even below two important supports: the significant dark blue 2024 today uptrend, currently at 493.25, and the purple neckline extension, currently 485.75, of the April to August 2024 head and shoulders top, plus below, as I say, the flatlining gold long moving average, currently 495.75, and just above the previously mentioned bright green neckline extension. Since then, prices started to recover upwards and tried to fill in the large gap overhead, which they very nearly did. But despite moving up over the gold long moving average, prices over the last week and the week before formed a small double top pattern, dropping down this week through the primary and secondary targets for this pattern, and down to test the bright green neckline extension, which is where we are today. Now, for the earlier triple top idea, I said last week on this, and I quote, "This pattern, though not a very pretty one, does give us some potential targets below, a primary target down at 480 even, and a secondary hard to reach target X1 down at 458 even. And the move lower 3 weeks ago down to 481.75 had just about reached the primary target down at 480 even, enough for me to consider it reached. Now, the only thing I can add to this today is that we properly reached the 480 zone this week, and target X1 at 458 even is still live, though it does look very lonely out there on its own." Winnipeg Canola. The market had, since November last year, for the most part formed 3 steps up and then 2 steps down action, gradually moving higher. Prices in mid-January seemed for a while to have been halted by the gold long moving average, currently at 630.80, but then broke higher, utilizing the long moving average, amongst others, as a springboard for yet a further move up. This action left us with a few significant features on the market. The first was the mid-September to late November 2024 dark blue bullish shift pitch walk. Prices had for a while become closely associated with the middle tine of this pattern, but prices are now in between the overhead middle tine and the lower tine below, which is currently at 611 even. Indeed, the action had morphed to become the second feature to note, and that is an important one, a bright green December 24 to early March 25 ascending wedge pattern, currently 659 to 688.30. Last Friday, the market closed below the lower trend line for the first time, and this week prices have fully, and I mean fully, exploited the move lower. I said last week, and I quote, "It's too early to give potential targets topside or downside, or even just potentials for a break higher or lower out of this pattern, but I'm keeping a close eye on it," end of quote. Well, this week we have already passed the primary target at 626, leaving a secondary hard to reach target X down at 578 even, and a tertiary target X1, an even harder to reach target down at 564.5. It'll be interesting to see if the market will move all the way down to these targets or not. Finally, this is something I have already expressed doubts about. It is the bow tie crossover, the imperfect bow tie crossover of the short medium moving average, currently 641.90, the medium moving average, currently 635.40, and the long moving average, currently 631.80. The moving averages went in and came out in the right order. Unusual that, but true. With a bullish incentive, but the issue is that it was not a completely clean altogether crossover. However, even with that being said, it is worth bearing in mind that such a pattern would have in about 15, that such a pattern in about 15 to 20 sessions after crossover would have one or more of the following: a new trend developing, an old trend being reinforced, and or volatility. The time period for this is between the 11th and the 18th of March. Thus, please be aware of this as we approach that period. Bursa Malaysia crude palm oil. I said here 21 weeks ago, and I quote, "Of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April." End of quote. Okay, so things have developed since then, but a good place to start is to look at those patterns highlighted so many weeks ago. The first of these patterns is the bright red neckline, currently at 44.35, of the September to November 2023 reverse head and shoulders pattern, which I've highlighted repeatedly and which even yesterday was supporting the market. Additionally, and this one I also added last time and many times previously, is the dark blue neckline, currently at 44.67, of the September 2015 to November 2017 head and shoulders top. I have not been sure of this one in the past, but as this is an old one, a super old one, that had been way below the current market, but has in recent times become significant, so I'd still bear it in mind. The third pattern here is the very slowly rising long moving average, currently 43.29, that stopped the market fall dead in mid-January and has truly acted as a base for the recent rise in prices we've seen. Now, there are other newer and closer to the market features to watch out for. And to start with, I'd like to show how the market has waded up through a wide congestion band between 44.08 to 45.59. Within this congestion zone below, we have the old March 2008 previous all-time high at 44.84, as well as the April 2024 high at 45.27, and the June 2022 low at 45.59. This congestion zone below helped hold up prices this week. Next, 3 weeks ago, I outlined the mid-August 2024 to mid-January 2025 bullish Andrews pitch walk, today highlighted in bright green on my daily chart. It's still very much a nascent pattern, only being 7 weeks old, but I thought it might be worth considering. However, this week we have seen a breach down below the lower time, currently at 45.80, followed by a pullback up, and we are now seeing the market trying to repair the breach today. I would, and probably will soon, finesse or morph this pattern in a heartbeat to a shallower bullish shift pitch, or even retire it completely, if I thought it appropriate. Next, a new pattern has possibly emerged, and this is very much dependent on 2 things. Firstly, this is something I see on my daily continuous chart, so if you disagree with having daily continuous charts, well, you won't like this or what I say about it. And secondly, the last 2 weeks' actions have helped draw this possible pattern. and it would not have existed without those actions, though in truth, I think this pattern is morphing into yet another pattern. It is a 2025 based possible reverse head and shoulders pattern for possible purple highlighted neckline, currently at 48.89. This is where it becomes a little trickier, as I've also drawn a new purple mid-January to date uptrend, currently 44.45. And I would ask you to view these two purple trend lines together, the neckline above and the uptrend below, as a singular nascent bull channel that may, just may, morph into an ascending wedge pattern. I said on this last week, and I quote, "The support for this idea is rather tenuous right now, but the construction does fit in with that idea for now." End of quote.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.